Hello, traders. It's 7:32 a.m. Chicago time, 8:32 Eastern, on an early broadcast of the Trader Bite this morning. I'm attending to some personal business and will not be here for the open, so figured I'd release it now. Thanks for joining. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The overnight session, the extended trading hours, call it overnight because I'm here in Chicago, but it really is just extended. Allocation solidly to safety. Money's flowing into the U.S. Treasury bond, leading the pack up 13 ticks, up 28 basis points this morning. Second place, we have the 10-year note up 4.5 ticks, up 12 basis points. The laggard today is crude. Crude is trading at 68.97 currently on the October contract, down 90 cents or 1.29%, followed by the DAX, the Euro stocks, the Dow, the NASDAQ, and the S&P. So money is flowing out of stocks overnight. We can see selling, I'll show you in a minute, selling throughout the night session. Yesterday's session in the ES was fairly interesting, got really good volume and some good rotations. It seems like the trade is back. So with that being said, what's driving the trade today? The main thing is the same stuff. Really, it's about a trade. It's about NAFTA, the negotiation between the U.S. and Mexico and Canada. It's about the U.S. versus China, and it's about Brexit. So there's a fair amount of uncertainty here. But you know what? We're still lingering around the 2,900 in the S&P. We have not come off that much from the all-time high, 2917.5. That's only 1 day's rotation away, really. And so that's what we're looking at. As far as what could be interrupting our auction, we just got trade balance just 3-4 minutes ago. And that was that came out just slightly better, 100 million better than expected at negative 50.1 billion. Imagine 50 billion negative. It's a lot of money. And then looking ahead, we just have some Fed speakers. We've got Fed Speaker Bullard at 9:20 Eastern and Kashkari at 4 p.m. Eastern. And then we have the Bank of Canada decision at 10 a.m. So really nothing significant, nothing too significant. Of course, Canada's significant, but nothing too significant in terms of the S&P or U.S. indices. Let me turn down my screaming newsreader here. So let's take a look at what we expected yesterday. Yesterday was fairly straightforward. Two key scenarios. The key scenario being a test lower, which we got. The expectation was for an open auction early. That gives us an impulsive move down. And then the expected continuation into the gap zone. And I said if it gets into the gap zone, then we're likely to get to gap zone mid around 28.82 or so. It didn't quite get there. The secondary scenario is test below, then push up towards the prior day's high. One thing I want you to note is that Friday's point of control is totally in line with Thursday's of last week. Both days have two distributions. So Friday had an upper distribution and a lower distribution. Friday's point of control ended up moving up on the close. The market is making, the participants in here basically are making every effort to hold on to that 2,900. And yesterday, just multiple tests 29 at the 2,900 just could not crack it. Creating some pretty good, what I thought were pretty good order flow based short opportunities. Given that we are opening at the bottom of the range, breaking the low, we are one time framing down still. And so I'm more leaning heavier on the sell side on pops. and just these tests and retests. For example, up here, there's a nice test and break of the IB high. So we have range extension up, and we have a retest of that high with much weaker volume. It's just had nothing in it, creating an opportunity for a trade back to at least VWAP mid. And it ended up actually pushing the IB low, giving us a neutral day type in which the first hour's trading is broken to the upside and to the downside. This particular market, forget the exact stat, I think it's the most recent study shows about 32% of days are neutral, where they break the first hour high and low. That leaves us with 68% of days breaking just one side. So it's not something I would want to bet for every time, but having broken and trending down like this, let's clean this image up a little bit. Having broken and trending down like it has, right into the stock zone, it breaks neutral right into the stock zone. It comes right back up. Very interesting trade, really. Other than that, looking at the overnight session, in fact, if you look at this on the heat map, here's the reopen right here. Okay, so we closed strong like bull right there. So you can see these big prints buying, and it continues to drift up into the session close after the pit close. And then from there, it really tries hard to hold back up at the 2900 right there. Tries to hold that 2900 again, goes for another test at 2900, puts in a peak at 2900 and a half. And you could see sellers, if we zoom into this a little bit, you can see sellers just pouncing on that. And we saw that yesterday continuously. Every time we get up to 2900, we get sellers just jumping in here. So you get these big circles in here. There's a fight every time it comes up here. There's absorption. There's all kinds of funky stuff going on. But overall, you could see that the overnight session very quickly turned into a sell fest. European Open right there. Very quick slip down. And here it's pulling back to the overnight VWAP or the extended hours VWAP and holding below there. So overall, just not able to get off the ground in terms of getting buyers. So it looks an awful lot like yesterday's extended hours. Yesterday we had this selling right from the European Open and selling from the European Open again, and we're holding below mid VWAP, holding below mid. We got tangled up with VWAP a little bit, but the low was fairly weak yesterday. I talked about it being a high confidence break of the overnight low, but it happened very quickly. Again, here it is. You could see that the market balance, we had an open auction in range opening type, both sides active, and then boom, just explodes downwards with pretty good delta. It looks like it might be a trend day down until this mess here happened, which inevitably has to cost a stop. Because we do have an impulse down and a pullback to mid, and that's a setup for me. It just didn't work. So that's the recap of what was going on yesterday. Looking at the current configuration, a few things I posted in the Convergent chat room. Again, multiple attempts at going above 2,900. They're met with good selling interest. Again, the VPOC yesterday, this VPOC for yesterday's session is on top of the MC point of control, giving us a strong indication of interest at 97.50. If we carry all of the volume profiles from the 27th forward, the most traded price was 28.9750, and here it is again. We ended up having it as the most traded price for yesterday's session as well. That's an indication, somewhat of an indication of balance. It had two stabs at the gap zone below. There's a gap underneath here. Let me turn that on. So this gray area here is a gap zone from the 27th. Two stabs, and it's bought up very quickly. Every time it gets into this gap zone, it's bought up very quickly. Every time it gets into 2,900, it's sold very quickly, as we also saw in the overnight session. So it's just what it looks like is it's a market that is really locked in. Now, what does that mean to us? It means that the break from here is likely to be a trend day break. Okay, so right now it's trading at the lower end of the range here, and it may break lower. But what it's indicating, given the way it closes every day, is that if we get above 2,900 today, we are likely to very quickly push up into 29.15 and the all-time high. There's a lot of volume that is cooped up in here, that is compressed in here in this channel that we've formed since Wednesday of last week, since the peak was put in. So just know that if we start to drift up into this 28.9750 and we build energy to push through 2,900, we're likely to go into imbalance to the upside to resume the overall trend. So what this would look like on a higher time frame chart, like 120 minute or 240 minute or whatever, this would look like a market that has broken higher with a gap, peaked, put in a flag, and is continuing. So we're in this flag portion right here. That's what this looks like to me. Okay, that's the main thing I want to impress upon you. Do not fade a strong move, a big rotation up above 2,900. It's likely to carry through. Okay, this morning there's a lot of time between now and the opens, 45 minutes. Usually it's 20 minutes because the trader bite's starting so early. But the scenarios are the same. This morning, I'm looking for an open auction in range again, just like we saw yesterday, at the lower end of the range. I'm looking for it to drift down, given the overnight action. I'm looking for 28.82 again in the stock zone right here. And then I'm looking for an impulse back into the range. And I'm looking for a test of 28.91. And then ultimately a tag at some point of 28.9750. That is the main play. So initially, it's likely to fall lower, but the overall trend, the overall impulse is expected to be to the upside once we break that low. The secondary scenario is very similar, but we continue. So we have an open auction that might test up, but we were looking for an impulse down. So if I see an impulse down, and it breaks the low, and it starts to consolidate and push lower, then we're looking for the other side of the gap zone again. Other side of the gap zone, 28.77 down here. Close the other side of the gap zone, and then come back into the gap zone and rest into the close. Those are the two main scenarios. I've run out of time. I got to jump into a car here and head downtown, but I'll leave you with those two thoughts there. Again, I invite you to listen to the last maybe 5-6 minutes of yesterday's Trader Bite to really take off this fall. The 2018-2019 season has started with the end of summer. It's really an important time to make a commitment to journaling and logging your trades. You got to have a trade log. You got to know what your metrics are, not just dollars, not looking at the statement and saying I made 200 or I lost 200 today and seeing what your account balance is. That doesn't really help you. Trust me, it doesn't. What helps you is knowing your statistics and metrics very deeply, and then using those to set incremental goals that you're aiming for the week, and that should temper your trading. So I invite you to listen to that for a minute. It's solid advice that I've given to my traders and have pushed onto my traders for a long, long time. So good luck with that. Take care.